Monday, October 7th, and this will be the, believe it or not, it's the second week of October, and it's the beginning of the second week of the government shutdown. So we do have, one little report out this morning. It's not a big deal. It's a TD Ameritrade. Comes out at, I think, 10:30 Eastern. This week, though, we have some foreign numbers. We want to watch tomorrow, to be honest with you. German manufacturing comes out at 6 a.m. Eastern Standard Time. So watch German factory orders, and again, we're going to kick off earnings season. So earnings season is also kicking off. So we got a lot of important information. The IFTA conference is out in San Francisco. I will not be joining that, and the reason I'm not joining the IFTA conference is because we had a scheduled grandchild. We were in Chicago, though, so it's tough to be in three places kind of at once, and you got to put priorities straight. So with that said, I would prefer to be at the helm in front of the monitors and looking for trading opportunities, because this week, as we all know, as Congress is sitting around, we are not out of the woods to the downside of the market, but there's surprisingly a lot of stocks starting to pop and make moves to the upside. So the indexes are not in balance with a lot of the stocks, and we're going to get into that in just a second. Just going forward, remember that earnings this week is going to be, as we begin, the real bulk of earnings will be next week. But, this week you've got a couple of them that you want to kind of pay attention to. I don't know if it's really all that great, but Fastenal, F-A-S-T, and I'll get into some of those in just a second and what I'm looking at. The first thing I wanted to start off with was the foreign currency market, and start with the euro currency. Last week I had a plan. And the plan was that I wanted to sell if we got a rally up to 137, or I wanted to sell a breakdown if we got below the 135.07 level, okay? And the reason I was looking at that is because this is the buy signal. The market pulled back and made a lower low. The low that we had here is 135.07. Hopefully everyone can see that, 135.07, where my finger is. That was October 2nd, the low. So we had this long shadow, almost looking representative of a shooting star. There we go. So as you can see, we have a long spike, sell off, sell off, sell off, sell off, sell off. But we generated a daily buy signal. So the key is we want to see if this market gets below, not this low, the next day. Notice what we did. The market came down and made a lower low. It did not break below to get us down to 134.80. So there is a lot of buying underneath that market right there. There's a lot of support under there. So any of the buyers that started in from let's call it from 10 to 30, from 135.10 to 135.30, there's some buying going on in there, in that range, all right? And then they took the market up. So how much higher can they take the market? Well, as you can see, the market kind of came back all the way down on Friday, and it gave as I could tell when I was speaking at the conference, a really good intraday 15-minute setup and sell signal. So with that said, my plan was if we got a little more overextended to the upside and getting closer to 137 area, I'd be looking to be selling there, and I'm still looking to sell under this level. Those are my two parameters. Nothing has changed. Let's take a quick look at what I was referring to on an intraday basis on Friday. So I'm not sure if the room caught this or if you guys are watching this, but while the stock market right now is playing victim to the equity markets conundrum of Washington, D.C., we have other markets that we can focus in on, all right? And so when we take a look at our markets, this may, maybe people took it on the sense that you know, you've had a breakdown, never sell the first test of support, the market rallies, you get a low closed doji, and it just takes out the daily low. So, I mean, that was a pretty nice setup in there. And again, what I would suggest is that today or this week on rallies, especially watch the pattern here. When you make a high and you go down, and then you make a shallow rally, watch for the potential. And we teach this all the time, and I'm sure you guys are going to know what I'm going to punch up here, right? A, and A, the old B, the old C, and typically AB extended down equals D, AB, CD wave. So you got to be focusing on that. Now, this may have been something that a lot of people may not have taken, like I said before. But one of the things that I think is really a focus in on is pay attention to when you get a period of time. For example, you take a look from where we made the snapback, so to speak, and you have this like trend in the marketplace. Notice that the market broke the trend, came back, and tried to test the level of the breakdown of the trend line, right? I mean, this is right out of TTU, trend line analysis. And then you have to say, listen, am I interested in taking this trade? Now, I think the time of day, maybe it didn't, but you know, again, 11:45, what has been the message that we've been talking about last week is a lot of these trends happen at the lunch hour. Biggest trends of the week happen at the lunch hour, and that still is happening. While you get the 2 o'clock, the 3 in the morning, the European trend, you get nothing for most of the day. People go to lunch, and then they start all over when no one wants to be participate in the trend. So, you know, that lunchtime hour right now, we need to respect that trend. That's what I kind of wanted to share with everyone for this morning. So for the euro currency, while we're still sitting here victim in the S&Ps, I think you're going to have some activity in the euro because we have a lot of numbers coming out. Like I just mentioned, tomorrow we have German manufacturing report at 6 a.m. So we're going to have some influences on the euro currency, and from a seasonal perspective, typically we see declines in the euro lasting into November, and then from November into early or late December, the first week of January, the euro rallies. So we can kind of look to take advantage of selling higher or selling confirmed weakness, and look for that in the euro currency up here. So hopefully that's something that can help everyone keep you focused. Watch your trend line breaks, number one, and of course watch your indicators and watch for those low closed dojis after rallies. Those are important things. It's not you know, the mantra here is to look for high probability setups and to keep small, because we're still playing the victim role with the U.S. government. So we have to kind of look, if you wanted to trade, you have to look for opportunities that are around the horn. Besides the day trading the equities. So let's take a look at what the market looked like as a whole last week. When we take a look at the equity markets, we have the cash market on a daily basis. On a daily basis, we've just been kind of in this range, and we are supporting. Now today we came underneath and tested in the S&Ps, which are pretty much synonymous with there is no real difference between the premium. It's not like there's a 10-point discount to cash to the futures, right? So we're pretty much trading in line here. So the moral of the story is we are going to generate today. We've been in a sell mode on a daily basis, and the concern that I have, folks, is that while we're in this sell mode, we don't go anywhere to the downside. It's just grinding. And I think that's going to fool people if something does get resolves, because a market that won't go down typically goes back up. And the key is, I think the one area you want to watch is going to be right above, not this high, which is 86, and not this high, which is 92. But I'm looking more like 97, just slightly over 97. If we get a move over 97, I'm still looking at that level for a pop into the market. I know that's a long way from here, but that'll certainly resolve all this chop and slop that we've seen. It takes 2 days to go up. It takes 2 days to go down. It takes 1 day to go up. And we're still, if you notice, the equity markets are still respecting in the S&P 500 the downtrend. But what is happening is the downtrend's not going down on heavy volume, and we're not losing steam on the advanced decline. So it is kind of internally not showing that we're still in a weakening state for the S&P 500. How did we end the week on the S&P 500? AD lines were actually fairly neutral. Volume levels were very neutral. On a weekly in the ES, we haven't, this is the weekly E-mini S&P, and we are not in the sell mode there, which is kind of unusual. So on the weekly basis, we're still not in a sell mode on the NASDAQ, and this is the Qs. And the AD line is pretty much more still neutral positive. We're above our moving average. Look at the on-balance volume. So this market's gone up, and on-balance volume is up. We're going to get right back to the Qs in a second, because there's a lot of stocks in that sector that started to move last week, and they're in a seasonally strong period that just began. So not all stocks are moving lower in this conundrum situation that we're in with the equities, and this is the Russell. So when you take a look at the IWM, the IWM had a doji from 2 weeks ago. If we close above the high, that's a failed doji top, which means we can move higher. And our person's pivots is illustrating a higher high and a higher low. So we're still in a bullish mantra or bullish mode technically, according to person's pivots. The volume popped its head up. So as the market rallied on a week-to-week basis, it did so on an increase in volume, and that's in the Russell. All right, so I mean, if it wasn't for the government and you just came off a vacation and you haven't listened to the news and you look at this chart, you'd say to yourself, well, what's all the hubbub? Why is everyone bearish? This is in a buy signal. It pulled back to the weekly moving average. This is the NYSE Composite Index, and what we've begun to do is, let me zoom this up for you. I was concerned because we started to see in the NYSE higher highs. So for example, this high is higher than this high, and this high is higher than that high. So we have consecutive higher highs, we have consecutive higher lows, and we did not make the higher high reading in the advanced decline. And we did see an increase in volume on that last little rally. Last week was more of a neutral state because the market, even though it's in a buy, it did pull back. The current close, if you look at this, we're at 96.75. Where were we over here? 96.90. So actually price, it looks on the surface that prices are higher, but actually from this peak high right there on the close, if you take a look at this, we're actually at about the same level of the advanced decline. We're at the same price. We don't have bearish divergence. Interesting. So even the NYSE is just grinding. It looks like more of a pause rather than a correction. Now, last but not least, the sickening diamonds. And all the diamonds are doing as we get by week after week after week and week after week after week, we look like we're just in a consolidation range. We've gone from a strong trend to a sideways consolidation level. So the question is, do we reverse the trend, or is the trend going to be resumed? And when I look at the advanced decline on a week-to-week basis, notice under a microscope, we look like we've made a bearish divergence pattern because the market made a higher high. But the truth of the matter is, look at this. This is a very interesting observation. The truth of the matter is, if I change this as the advanced decline, this is a very important technical lesson because the advanced decline doesn't generate or identify intraday or intra-time period ranges. What it identifies is based on the close. So the close of this week, notice that the advanced decline is lower than the highest point. But the highest point was when the diamonds closed at 156.20. We closed here at 154.30. So actually, this is actually truly representing lower prices. We didn't make higher closing prices, so therefore the advanced decline isn't really showing us bearish divergence at this point. All it's doing is showing us a neutral situation because the market's just grinding kind of sideways. It hasn't resolved itself one way or another. How am I supposed to determine a position of being extremely bearish or extremely bullish when we are in a neutral market condition based on the weekly charts? After all, I want you all to remember, the higher degree time frame, that's the most important time frame. Shorter term, it gives you short-term moves, but it's the trend direction, it's the signals and the market consideration of the longer term that we need to pay attention to. And if you think it's confusing, why it's confusing for a lot of traders is because the markets are reflecting that confusion. And so when we go over here to scanning and planning, all right, and we start looking at, and as we discussed at this conference on Friday, there's a lot of names that just don't make sense of why they're rallying. HOG, for example, HOG. HOG is Harley Davidson. Who would think that in a seasonal trend that generally goes down that people are buying Harley Davidson? Well, they sell a lot of Harleys abroad to China. They sell a lot in Europe. So Harley Davidson is breaking out to the upside, defying its seasonal downtrend, and it's doing so on increased volume on a weekly basis. It has outperformed relative to the S&Ps vastly. That's what this red and blue is all about. It's really outperformed. And so little things like when we go to, we've talked about this in the room before, when we're looking at the casino stocks, this is Wynn. It's breaking out, but it's breaking out on substantial weekly volume. That's very strong. So we're just kind of waiting for a little seasonal downturn, and it's defied its seasonal downturn, and it kind of goes into November into the high, and then after November things kind of slow down for the sector anyway. But here's what's interesting. We've been talking about some consumer discretionary stocks. One, as you know, we've been talking about Coach. So as far as Coach is concerned, and I know it's a women's person, shoe, unique apparel accessory division, but the on-balance volume is broken out. It is starting to move in accordance with its seasonal tendency. And, you know, it's got this just the opposite, AB, and this would be CD, and we have the potential move now going with the D wave. When we draw a little simple trend line across this resistance here, let me get rid of these arrows here so we don't get too confused. Okay, so all right, so more importantly, here's the little down trend line. The market can't really, it went up in Coach, had a little rally, it's had a shallow pullback, and all of a sudden Friday we got a little buy signal, and we popped our little head up on the on-balance volume above my little moving average line here. So we definitely have a little accumulation. I would say watch this particular stock, because if this is an ABCD wave, there's a little bit more to this upside here in Coach. And how much is there to the upside? Well, the first thing we would probably respect is the fact that we'll come in and fill in this gap right in here entirely. The next thing we'll probably see is it come back up to test this old high. But truthfully, if this measurement is correct, from A, B, C extended up, it will give a move back up to 60, and possibly we'll see what happens at that point in time. The the story with Coach is it's kind of lost its favor with a lot of people, women. It's lost market share to Michael Kors. KORS is that stock symbol. But there must be something going on because we've been talking about it for several weeks. It's starting to see an accumulation of volume here in this stock. Something's going on. I'm not sure if they're coming out with a product launch. I haven't gotten a chance to go and be nosy at a shopping mall and ask the salespeople there what it is. Maybe there's a buyout. I don't know. But something, they are accumulating positions in Coach. So with that said, I'm still favorite and still like Coach as a trade. And if the Congress is still out there mixed, I'll tell you what, and can't pass laws and legislations, you know, as this stock continues to maintain its trade above, say, 56, and it's, or excuse me, 54, I'm still in, as long as we have the market making higher lows, higher highs, et cetera, respecting the, not only the daily buy signal, more importantly, the weekly buy signal, I think that this stock easily could see the 62 to 65 range in the next 6 to 8 weeks. So that's one of the interests that I have there, especially as it enters a seasonally strong period of time. So now let's take a quick look at some names that you guys might not see otherwise. Which is what we come here for planning and scanning. Trade ideas and something that's not in the news. All right, so this is an old stock. Some of you old traders or veteran traders might remember this name, Aruba. Do you guys remember Aruba Networks? Okay, so last week it has a very similar pattern. Rallies, sideways, break. Buying going on until about mid-October, going into early November, and then we make our annual bottom at around the end of November. But they're starting to look at this, and MSFT, believe it or not, look at Microsoft. Microsoft is a stock that we're starting to see a pop. Look at this bottoming action in the seasonal trend with Microsoft. It finally pops on or about October 11th. All right, and starts its annual trek to the upside. Microsoft, I don't know if they're talking about it in the media. I haven't watched the news. I try not to nowadays. You know, especially as everyone's kind of throwing opinions around what they think of the market rather than doing their own research and looking at what's going on with the internals. And the internals are what sectors are being bought, what's the volume behind those buying. Microsoft looks as if we are seeing respecting this weekly buy signal. It hasn't gone down, and we went into a high close doji, and it's still respecting that area. So Microsoft, believe it or not, the volume action speaks pretty decent, because notice that we did take out and make newer gradual highs, but boy, we did do something else. We made a newer, fresher high in volume. So there showed in the last 3 days some volume participation. So pullbacks this week, and again, this is our weekly pivot. So pullbacks near weekly support, which is 3304. I'm showing that to you right there on the screen. 3304, that green line, that's our weekly support. If you get a pullback on an intraday basis, and I don't know if we're going to go to 3304, but 3323, I would be looking at some credit put spreads in Microsoft going ahead. And I'm going to be watching that trade for myself, by the way. So if I'm in the room, I'll at least announce that. But put a trade alert on Microsoft for maybe 33, but you probably want to put a trade alert. I'm going to go 33. Let's go 33.35. put a trade alert, MSFT at 33.35. All right, so that's the alert from Microsoft. That doesn't say let's do something. It's just like the other day when we were doing the credit call spreads in Priceline. I didn't say do the trade at 1,064. I said let's alert so we can start paying attention to it and give us a chance to work orders and come up with the best strategy. And that's what I'm trying to do here with Microsoft. Okay, so let's take a look at that when that alert goes off. Let's take a look. There's some other names that I think. This is a company that on Friday had earnings, Comtech Telecommunications. Again, technology hardware in the communication sector is starting to move, outperforming the broad market, and the stock, if you think that's a huge gap, we gotta maybe ignore that. I think that might be a bad mistake. There was some big strong volume that popped into this market. Notice that the market was moving sideways, on balance volume was moving lower, but we weren't going anywhere in the stock. That's kind of like who was selling this market and all of a sudden it wasn't moving lower. If you're starting to sell a stock and it doesn't go lower and something happens, you're going to get that kind of result, all right? And if you take a look at the weekly on balance volume, in this whole time period, on the whole time period that the daily was moving lower because the volume was shrinking. That's what on balance volume was saying. There was just no interest. It was contracted ranges. Nothing was really moving. It was sideways with lower volume. What was going on in the weekly at that same point in time? It was moving up. So every week there was, even though the market was sideways, on balance volume, it showed that there was absolutely accumulation going on. Someone knew about this. They knew, insiders knew. There's no other way to explain it. Now, the seasonal trend lasts till mid-November, so this might be a very short-lived trade, and it's a specialty trade, not one that we would probably look for an options position, okay? But what I wanted to show you was there is a lot of names in this space, in the telecommunication hardware spectrum. Weekly buy signal, big volume. This is, everyone may remember this name, Motorola Solutions. After the split, boy, it's starting to see a nice breakout, and we want to watch for confirmation on the volume in here. Otherwise, guess what? This market isn't going to just stop over at 64. This thing has potential of really breaking out in a big way. And look where it is over for the year. So you're defying the gravity. The weekly volume's breaking out. You're breaking out in price and you're breaking out on weekly volume. They love this thing. So this has got probably more room and most likely newer highs coming in for the year. Last but not least, ELX. Again, another name in this space which generated a daily buy signal. It's a $7.81 stock. Volume wasn't all that great on the daily, but look at the seasonals. It starts to come into play in September, has an extremely strong trend. Look at this monthly chart over here, friends. ELX, monthly high close doji, last month gave a monthly buy signal. Pullbacks, if you get one, to around 720. If you get one, which I doubt we'll see one, but let's say you get maybe 738, I would look for setting an alert on this particular stock at around 765 to pay attention to that. ELX is the next one for the week. ELX, set alerts on that at 769. This is kind of like a stock that's $7 stock. It's kind of like a it's almost like an option premium. So, you know, you got to make your own determination of whether or not you want to participate in this one or not via an outright purchase rather than a stock. But where can this thing go if it's in the space? Many of us may not. This is why we got to understand, if you want to know where a market might go, ask yourself, where the hell has this thing been? Now, I doubt this is going to be a stock that's going to go back up to its crazy field days with its all these splits that it did, 2-for-1s, 2-for-1s, 2-for-1s. So I mean, this was probably an $800 stock at one point, and it's a $7 stock, and it did have the next earnings is out on October 24th. But it's in a space that's starting to see its seasonal trends, and it's in a time period where we're starting to see a lot of like stocks move. And as you can tell, it's spent a long time going nowhere, and this could be finally its move to the upside to give you a nice little trade. And that's part of what planning and scanning is, digging for trades that no one else is looking for. So one other one that I think I know we're looking at the market open is Netgear. And Netgear, to be truthful, if you have, if you go anywhere, like Whole Foods now, a lot of stores are opening their doors to attract people with free Wi-Fi. So you can go to Whole Foods and hang out and Star. All these stores are offering free Wi-Fi, except for hotels. When you go to a hotel, like a Hyatt or a Marriott, they hose you unless you're a VIP, you know, special, use their hotels a lot, then you get free Wi-Fi. Otherwise, you pay like 15 or 20 bucks a day. Everyone's giving free Wi-Fi out, and they've got, if the stores are offering free Wi-Fi, they've got to provide the service. That means they got to buy the network, they got to buy the equipment. Netgear NTGR generated a weekly buy signal 3 weeks ago. It had a breakout with volume. It really didn't move much in price. The volume looks more bullish than the price action on a weekly basis. Look at the seasonal trend and look at the volume levels for on the daily. So this market is another one. Netgear, kind of like Netgear. I'd be hoping for pullbacks on a weekly basis to around 30.24. NTGR. I would set the alerts there to watch that at around 30. That'd be another one. I'd say 30, 35 coincidentally. Just to see if we can get, now let's make that 30, I'll be more generous, 30.50 to give us a little more time to set that alert, okay? So there's your alert setting. Netgear is another stock. We have a seasonal trend that obviously lasts a bit. Upside minimum objective, I think if you get a small pullback, remember higher weekly lows, that should get us into like 30, maybe 20. You know, if we respect these higher lows, we're making higher lows. So if the market has one more downturn in here, maybe we can get down into this zone. It'd still be a higher low. Last week's low, folks, last week's low, respecting the moving averages, was 29.99. So if you get a little pullback, you know, and the volume doesn't, you know, completely erode, I think this is the time. Netgear, certainly it's the seasonal time period where we start to see a move. So I kind of like that market, and the seasonal trend goes into early December. So there's time left on this one to pay attention to. So hopefully I gave you some good ideas there. There's a couple others I could talk about. This one's kind of freaky. Look at this. This is EchoStar. Remember EchoStar? I mean, EchoStar is breaking out. So DV, DirecTV, EchoStar, satellite dish had a huge week, and it doesn't even have earnings yet, okay? So another one in that space. Riverbed Technologies. But Riverbed, you know, it doesn't have a weekly buy signal, but what it has is, notice here on Riverbed Technologies, this low and that low, okay? And I want you to examine this with me. That was a little stutter there. We started to make lower weekly lows. Agreed? This close, in fact, let me go through some of this stuff real quick. So you even have a low close doji right here, but it's a low close doji after a downtrend. Is it a failed doji bottom? Yeah, we might see some more downside price action. But the funny thing is, that close is lower than that close. But I got news for you. It didn't come on, look at the volume levels. So if this close is lower than that close, why didn't they sell it? You have bullish convergence on the volume. That was probably a false bottom. Now, you get a little pop at the upside, but the true buy on Riverbed, this space doesn't even start to pick up in this stock. It has a seasonal tendency in early to mid-November, but we want to focus and watch Riverbed down the road. I give that to you guys. It's just more stocks in that space. Remember, the mantra here is we don't want to be picking a stock that's only one stock in the whole sector. I want to pick a bunch of stocks that are all looking good. They're buying the sector. That means institutional money's behind that. They will defend a stock if it has a pullback. They'll add more, so they'll get into more. So that's what I wanted to focus in on. The IIX is also okay. The internet. If we take a look here, moving forward. So the reason I'm focusing in on this is the internet index. It's the time of year where you start focusing in on that stuff, okay? And the IIX has had a, you just started to take a move and break out, and it's in a seasonally strong period of time. So there's where we have some ideas for you guys, and I look forward to seeing you guys in the room this week. I'm just going to conclude doing some writing on the finishing touches of the Commodity Traders Almanac. Yours truly did not watch a whole lot of football yesterday. We put in, believe it or not, from 9 o'clock yesterday morning until 8 o'clock last night. We had to really crank up, put in an 11-hour day, plus the babysitting, plus the kids. I'm a little tuckered out, but I wanted to share some of this, I think, really relative information for you guys. Okay, so which just set off an announcement that Netgear popped lower and popped right back. So boy, that's got to tell you something right there. All right, I'm going to switch it over to Butch. I hope everyone enjoyed today's session with planning and scanning. Stay small on your day trades in the S&Ps. We're still victim to Congress wrestling back and forth, and unless something's changed in the last 20 minutes that I'm not aware of. Other than that, watch the euro currency. Has a little seasonal tendency to break right now. And again, any other trade setups we see, I'll certainly send out a tweet and hopefully be in the room and trade them with you this week. Everyone, be safe and good trading this week.